I figured out a way to make more money with SEO than any other method. More than affiliate marketing, more than running an SEO agency. Plus, here's the kicker. It only takes 10% of the time and energy compared to these other models. I'm talking about angel investing.
What?
But not in the traditional sense of giving money to a couple of 20-year-old Silicon Valley tech bros. I mean becoming an SEO angel investor, where you can put up your money, but even better, your SEO skills and other knowledge and resources in exchange for a percentage of a business. And it doesn't take a lot of money to get started with this. In my experience, businesses gladly give away a part of their company in exchange for expert marketing knowledge. And in this video, I'm going to show you how you can get started yourself. And to spice things up, I've tossed in some golden nuggets from some of the most prolific angels in the SEO community: James Dooley, Nick Eubanks, and Kevin Indig. As for me, so far I've done this a handful of times. My publicly known SEO angel investments include Surfer, the on-site SEO tool, which grew from 1 to 13 million in annual revenue since I joined the cap table in 2019. Bloom, Thailand's #1 cannabis product company, which ranks 1st, 2nd, 3rd, and 5th for Buy CBD Thailand, thank you very much. And Precondo, a Toronto real estate agency, which was acquired last year by iRise Realty. By the way, if you have a business you'd like to partner with me on, or would like funding, reach out at partner@diggitymarketing.com. I'd love to learn more about your business. Now back to my previous angel investments. Some of these included cash from my side. Others I bought in with pure knowledge and resources. And through them, I've amassed nearly as much value and wealth as I have actually doing SEO for myself. Why does this work so well? Because as a marketer, you're able to help businesses like these grow, allowing them to laser focus on running their business. Let the lawyers focus on lawyering, let the dentist while you market for them. Also, there's another upside of actually having control of your investments. Sure, you can go invest in NVIDIA right now, but do you have any influence on how it will perform? Of course not. Now let's discuss what actually is an angel investor. According to Investopedia, an angel investor provides initial seed money for startup businesses, usually in exchange for ownership equity in the company. An SEO angel investor is different. The first difference is leverage. You have a superpower in the form of organic traffic. In exchange for your expertise, network, and resources, instead of buying into a startup at $1 per share, you might be able to get shares at 50 cents per share, or even $0 per share. This is called smart equity leverage. By the way, when you're putting up work instead of money, you're essentially doing a joint venture or JV. And that's exactly how Nick Eubanks got started angel investing when he partnered with a dentist to create a nationwide dental lead generation website. Which is also exactly what I do with my JV company, LeadSpring, partnering with SaaS businesses, e-commerce stores, and law firms. Another difference is the type of business you might invest in. The Investopedia article defines angel investors as those who invest in startups. This might include businesses that are just concepts and haven't yet made a single sale. But an SEO angel investor often invests in businesses with traction, that have made sales, that have product market fit. And if all works out and these businesses have an exit event, you're looking at real wealth generation. Now, I'm no Tim Ferriss, but according to this article, Tim invested in companies like Uber, Facebook, TaskRabbit, Twitter, Shopify, and Duolingo. His $25,000 Uber investment alone is worth over $100 million now. And sure, this is an example of being in the right place at the right time with the right connections. But being so familiar with your own industry, wouldn't you also say you have an edge? A side benefit that I particularly enjoy is that with investments like these in your back pocket, it's like living life with a lottery ticket. It's exciting. Another perk that James Dooley pointed out is synergy. James said, quote, "When you have a stake in multiple businesses, the ability to upsell, downsell, and cross-sell between them is enabled. You can even get reduced rates, allowing these businesses to have better margins and grow faster." James also said that, quote, "Growth by acquisition has 100% allowed me to get to numbers in life I could never even dream about." Just to add to what James is saying, and I'm stealing this from a talk I heard from Ace Chapman, a legend in the acquisition space. Let's say you have a client SEO agency and a link building company. And the client agency sent $1,000 worth of business to the link building company buying links. How much value did you add to the link building company? $1,000? Wrong. Yes, the link company got that $1,000, but the value of the company increased by $3,000 if we're assuming a standard 3x valuation multiplier. So $1,000 actually became $4,000. This is synergy. Kevin Indig also mentions knowledge as another side benefit. Kevin's got quite a long list of angel investments under his belt according to his LinkedIn profile. He says, quote, "Angel investing is a great way to learn, more so than making money. I learned a lot and met many smart people." When you go through this process, you get a crash course MBA. You also get deeply familiar with the product and service your partners are offering. Moving forward, one of my favorite angel investment benefits is how well it expands your network. Founders are going to ask you to come in for important meetings. They're going to meet A players and introduce you. They're going to ask for your feedback when hiring people. Your network will expand and your list of A player recommendations will as well, which in turn will make you a more resourceful investor and business person in the future. And let's not downplay the time leverage you get with investing. You get to feel like you're a part of something without having to commit as much time as if you were an actual employee. Now I'm about to jump into how to get started with this, but I must warn you, not all is peaches and sunshine with this model. First of all, it doesn't always work, especially when you're investing in businesses that don't yet have product market fit. According to the book Angel by legendary investor Jason Calacanis, who typically invests in super early Silicon Valley companies, to make the numbers work, you want to invest in 50 companies, of which only a few will work out. It's been said that the fastest way to become a millionaire is to start with $1 billion and then start angel investing, which is why you should only allocate as much money to angel investing as you're ready to lose. That said, investing your time or knowledge for smart equity is a less costly alternative, which is why I love SEO angel investing. By the way, here's a quick word from the sponsor of this video, Search Intelligence.
This campaign got us big links in websites such as Lifehacker, Wells Online, Daily Record, and about 20 other news websites. Let me show you how we've done it. We knew that people will be flying a lot this summer, and we knew that journalists will be writing about this topic a lot. So, on behalf of our client, we put together a nice guide about how to fall asleep on the plane. Then we use Muckrack to find journalists who write about travel. Then we put our advice in a nice email and send the tips to the journalists. Within just a few days, the links started landing, securing our client natural placements in really big websites, just like this, and this. This is a great example about how you can leverage seasonal trends to earn links to a website. Anticipate what journalists want to write about at all times and give them the stories that they need. They will reward you with some great, juicy links. I hope this is helpful.
Now back to the video. Another issue is finding good deals in the first place. I agree with Kevin when he says, if you have money, you'll find opportunities to invest, but the best deals come from a strong network that pulls you into opportunities. We'll talk more about this later. And once you find these deals, vetting which ones are bad and which ones are good is challenging. Nick Eubanks shared that early in his career, he'd been part of ventures that were taken down by trademark issues, and in another, the founder was just straight up stealing. And now he's learned that vetting isn't just about vetting the business deal, but vetting the founders as well. So you've decided you want to try your hand at this whole SEO angel investing thing. How do you get started? Step one is to build your deal flow. In order to find good deals, you need a big enough selection to choose from. The way I built my deal flow is through my personal brand. Pre-Condo came to me because of my reputation as a good SEO. Surfer was a great fit because I have a personal brand in the SEO space. You might be thinking, personal branding isn't for me. Bro, it's too late. You already have one. Are you on Facebook, Twitter? Well, great, you have a personal brand. How I built mine is so easy, it's stupid. See this Facebook post from 2015 from someone needing help with their SEO? Here's my reply, genuinely helping them. No pitch, just genuinely helping. Meanwhile, building trust and establishing myself as an expert. Then I started writing blog posts detailing some of the SEO tactics I was using. And those blog posts started getting shared by others organically. It was all pretty low effort. Chances are you know me through YouTube, but YouTube is really only a 2 to 3 year endeavor. I barely just got started. Moving on, you see these two posts right here pinned at the top of my Twitter and Facebook profiles. Got a business and looking for funding, marketing, partnership? I'm looking for angel opportunities. Would love to learn more about what you have going on. These posts bring in 80% of my deal flow. And I can also say that the deals I get through them are twice as good as compared to when I go out looking for them. When the deals come to you, they're just better. Kevin Indig built his personal brand through his Twitter and LinkedIn social following, as well as his Growth Memo newsletter. The personal brand playbook is simple. Choose your platform, whether that be social media, podcasts, YouTube, whatever, and help people. That's literally it. You can also do what James Dooley does, and I do for that matter, which is to attend masterminds and events. Dooley uses that time to scan the rooms he's in for people that work hard, have good ideas, and look fun to work with. Now that you have deals and opportunities coming in, let's work on your vetting skills. Come in close because what I'm about to say means everything when it comes to vetting. All about the founder. You're vetting the founder even more than the business opportunity. Invest only if you buy stock in the founder themselves. Ask yourself, what are the founder's chances of succeeding in this business and in life itself? Have they done this before? Do they need this to work? Have they put their own money in this business? Nick loves what he calls numbers founders. Founders that can mathematically prove how the business model is going to work and generate a return on investment. Kevin agrees that your best bet is on the founders themselves. But you're also looking for other positive signals such as product market fit, sharp execution, execution, and a good target market. Speaking of product market fit, if this is your first time angel investing, do not touch startups that do not yet have traction. Before a business has product market fit, you're speculating, which is a fancy word for gambling. That said, let's say you found a great opportunity with product market fit and a great founder. Here's some of my favorite vetting questions. Can this business scale? Does this business have an unfair advantage? Are you going after a gap in the market that your competitors don't fill? And what's the market cap of this business? Okay, so you found a great company to invest your time or money into. Now it's time to make a deal. How much time, money, or both are you exchanging for what percentage of that company? This is always a challenge. If it's an ambitious founder, which you want, they're gonna think their business is worth
$1 million.
even though the company doesn't yet have the financial history to back it. To check if a business's value makes sense, look for comparable businesses in the same industry that have raised funds before. After you've agreed on the value of the business, now you can start to negotiate on how much time, money, or both you're going to contribute for a stake in it. Next, go to LinkedIn, add angel investor to your job title, and go show off to everyone you know. You're done. Not quite. If you want to take this path seriously, just like everything else, you want to be the best damn angel investor you can be. If you came in with smart equity and not just straight cash, you deliver on what you promised. But even if you just invested cash, give your time to the founder whenever they ask. Be there for them. Give them solid advice. Introduce them to your network. It's a win-win. Your ventures will have a higher success rate, your reputation will improve, you'll get better deals over time, and your partners will love you. Again, if you have a business you'd like to partner with me on, please reach out at partner@diggitymarketing.com. Otherwise, subscribe for more videos just like this one.